Joining me now to preview the likely decisions of the committee is the Chief Executive of Carry Asset Management Company, Mr. Johnson Chukwu. Good morning, Mr. Chukwu. Thanks for joining us on the program.
Good morning, Bisa. Thank you for having me.
Now, how would you describe the impact of the last meeting on the economy so far?
Well, as you know, the last meeting decisions were announced at the peak of the lockdown. So it's actually quite a difficult thing to assess the outcome, because the basic thing they did was they reduced the MPR by 100 basis points, which is basically meant to drive credit. But as you know, the economy is just opening up. Not many people have gone back to the banking system to seek for credit. Of course, we know that the absence of demand for credit has actually driven down interest rates, as well as the measures put in place by the central bank to offer federal government debt instruments as sub-market rate. Those factors have driven down interest rates. But I don't think the low interest rate was largely as a result of the reduction in monetary policy rate. It was basically because, one, there's low demand for good credits. Two, economic activity has been very low. And then the alternative investment opportunities for the banks are giving them yields of very low, less than 3% for treasury bills, and for OMO also less than 10%. So the banks had no choice than to look for the few good credit customers and lend to them at lower rates.
There's a general consensus that Nigeria cannot escape a technical recession in the fourth quarter. How would that shape the outcome of today's meeting?
I believe at this stage in time, everybody have recognized that the second quarter of this year was lost. There was virtually no economic activity. Even the Minister of Finance said that the economy was almost at a standstill in the second quarter of this year. She also stated that the third quarter and the fourth quarter are also going to see low economic activities. So with such near economic shutdown, it's so inevitable that the economy will go into a recession. Even with the best of intention, the government has projected to spend about 2.3 trillion naira to reflate the economy. They are still, without expenditure prediction, still expecting that the economy will contract by about 0.459%. This is actually more optimistic than what the World Bank is predicting for the country. So it will be difficult when you lock down your economy, when economic activity is not taking place, that you should expect that economy will escape a recession.
But do you anticipate another rate cut in today's meeting, or do you expect a shift in focus to other monetary indicators that are more indicative of a money sub 7.5% at the beginning of the year?
You know, I did say earlier that the central bank also adopted some unorthodox or unconventional methods to manage liquidity in the system. That's one of those methods they've adopted. It used to be called stabilization securities, but today I think they no longer call it stabilization securities. What the central bank is trying to do is to take out liquidity from the system, given that there is a limit to what it can offer in terms of OMO instruments. And I did say that, unfortunately for us, that there is a disconnect between the monetary policy rate and the market rates really in the economy. These major monetary policy tools are no longer very effective in managing liquidity in the economy. And therefore, the central bank has adopted unorthodox methods, which includes the option of debiting banks that are bidding hugely, making huge bids for FX in the market, so as to reduce the available liquidity they have and moderate the demand they're making for FX. But those are temporary solutions, because the banks are not bidding for themselves. Most of the banks are bidding to meet their customers' unsatisfied FX demand. So if you take the liquidity away from them, the customers whose balances are still in credit will be asking the banks to continue to bid. It's a difficult situation the central bank has found itself, not for any making of its own, principally because we are going through economic challenges, partly occasioned by the COVID-19 and partly as a result of our structural economic deficiencies.
CEO, Carry Asset Management Company, Mr. Johnson Chukwu, thanks for sharing your thoughts with us this morning.
My pleasure.